Hello everyone, welcome to Commerce Logic. Today we are going to discuss about the topic salaries. And before going into the discussion, please subscribe the channel and hit the bell icon to receive more updates. So now we'll get into the topic. That is salaries. We all know about salaries. If you think about salaries, then we'll get about our father's salary, our mother's salaries, or whoever works will think that will get an idea in general that they will get salary. So it's a type of income where an employee gets from an organization. Now let's see what actually it is. Employment may be partial or full time. That means it may be a part time or it may be a full time. It's a relation between the employer and employee, and that is entitled to a salary. Next, salary is a periodic payment from an employer to employee as specified in the contract or agreement. See, salary is a periodic payment which is received by an employee from an employer, which is specified in the agreement. At the time of entering into the contract, people may mention the terms of salary. So, according to that terms and conditions, employer may agree to give a salary, that is a periodic payment to an employee for his or her services rendered in an organization. Next, salaries are calculated annually, divided by 12 and paid out each month. That means salaries are actually calculated per annum, but they are going to receive per month. That means the total amount is divided by 12. Then you will get certain amount, and that amount is called as salary per month. Then, for example, now let's see some of the examples about salaries and what kind of incomes will come under salaries. For example, here professor's monthly income is taxable under the head salaries. So, professor's monthly income is taxable under the head salary itself. Then he or she will receive an examinership fee which is taxable under the head income from other sources. See, if a professor gets monthly income, he is also an employee, so he will also get an monthly income, and that is called salary. In addition to this, if the professor gets any examinership fee, then that will be taxable under income from other sources and not on salary. I think you understood this point. Here example for salaries. That is, for a director is entitled to receive the fees, that is salaries. Here, a director of a company is entitled to receive the fees, and that is called salary. It is taxable under the income from salary. But his fee for attending the meetings of the board is taxable under the head income from other sources. Observe the difference here. He is a director of a company is entitled to receive the fees, and that fees is called salary, and that is taxable under the head salaries. And if he receives in addition to salary like fee for attending the meetings of the board, that is taxable under the head income from other sources. A director will perform his duties in an organization. For performing such duties, he is entitled to receive the remuneration called salary, that is, fee, which we have learnt here. But if he attends any board meetings, then he will get such an income in the form of fee, and that fee is called income from other sources, and it is also taxable under this head. Now, next one. For official liquidator, in addition to his salary from central government, Consequently, remuneration received by him is taxable under the head salaries. For an official liquidator, in addition to salary, even though he is receiving salary, if he receives any other income for performing his duties as an official liquidator, that income completely taxable under the head salaries. Next, this is regarding a partner in a partnership firm. See here, salary of a partner by a firm is nothing but appropriation of profits. They are taxable under the income from business and not charged under the salaries. See, here salary of a partner by a firm is nothing but appropriation of profits. That means in a partnership firm, the partner will take salary that is out of profits and they are taxable under the income from business. So they are taxable, they are charged under Income Tax Act. That is, it will be treated as income from business or profession. So out of that income only, these people, that means partners in the partnership firm, are going to take the remuneration. And this salary is appropriation of profits. That means out of profits only they are going to take their remuneration. It is not considered as income from salary, income from business or profession. It is considered like that. So, and not charged under the salaries. In simple way, a partner in a partnership firm is going to take remuneration out of profits, and this is not taxable again under the income called salaries, because they are taxable under the head income from business. See, these in the partnership firm, partners are the members. They are the persons who does business. So, out of that business income, they will take salary or commission or remuneration, whatever they like, and whatever the term we can use it. But their remuneration is out of profits, right? And that profits are from business. That is what the partnership firm continues to do for earning profits, right? So this income is not charged under the salaries of partners. The income of the partners is not taxed again under the head salaries, as it is already taxable under the income from business, right? So now, income of member of parliament is taxable under the head income from other sources. So these are all the examples of income. So here we are going to study how this section 115 BAC is going to impact the salaries. Now let's see. Finance Act 2020 has introduced a new optional tax system for individuals and HUFs, that is Hindu undivided families. This act has introduced a new optional tax system itself for what? For especially individuals and Hindu undivided families. And the section 80 CCD and 80 JJAA is not applicable to HUFs and individuals. See, basis of charge is section 15. Section 15 deals with basis of charge. Under this, there is certain definition for salary. Now let us see what is that. Salary is taxable under the head income from salaries. The term salary itself implies that it is taxable under income from salaries, right? It is taxable on the amount which is due or paid, whichever is earlier. What the amount we are earning in the form of salaries, that is being taxable under income from salaries. Now, Salary, especially salaries section is 17, subsection 1. Let's see what is salary and what are the things included in the salary. Right. Salary includes wages, allowances, annuity, pension, gratuity, fee, commission, advance, leave encashment, and also perquisites and profits in lieu of salary. So, salary is nothing but it is not just money. If you aggregate all these allowances, annuity, pensions, gratuity, advance, leave encashment, and also perquisites and profits in lieu of salaries. If you include all these things, if you aggregate all these things, then you'll get certain amount, and that is called as salary. Allowances are the fixed amount of money in addition to salary. In addition to salary, there are certain other allowances which we have learned. Allowances. What are allowances? Fully taxable allowances are dearness allowance, city compensatory allowance, EA, servant meal, medical, non-medical, non-practicing, hill allowance, warden allowance, deputation, and overtime allowances. See, allowances are the addition to the salary. See, allowances are allowed to the employees for their services. So, for the services rendered by the employees, these allowances are granted to the employees in addition to those salaries. Now we'll see partly taxable allowances. These are fully taxable allowances. That means these are taxable, and partly taxable allowances are nothing but they are uh, only partly taxable and not fully taxable. See, HRA, that means house rent allowance. It is under section 10, subsection 13A. At the least of the following is an exempt. So, while calculating house rent allowance, we need to consider these three things. And out of these three things, the least one will be the exempt. Okay. So 50% of the salary in metro cities, else 40%. If an employee is residing in metro cities, first condition you need to calculate is 50% of the salary. If the employee is not residing in metro cities, then you have to take 40% of the salary. Then what the amount of actual HRA you are receiving. Next, rent paid minus 10% of the salary. Then you will get each of the amounts if you calculate these three. Then list of the following will be the exempt of HRA. Now we'll see special allowances. The section of special allowances is 10 subsection 14. Wholly, exclusively, necessarily. Wholly special allowances, exclusively, that is particularly, necessarily. Only the necessary things are going to be allowed. Now, children education allowance. We employees will also get children education allowance, that is 100 per child and maximum 2 per children. Hostel expenditure allowance 200 per child and maximum 2 children. And next, transport allowance is rupees 1600 per month and rupees 3200 is drawn in case of handicapped, blind, deaf and dumb employees. And next, we'll see about all these things: conveyance, traveling, daily helper, research allowances and uniform allowances are exempt to the extent which they are incurred. These are the allowances. If any employee has incurred, then they are completely exempted. Then, special compensatory allowances. So these are the special compensatory allowances. That is, if the employment is in hilly areas, then the compensatory allowance will be in between 300 to 7,000 rupees. And if it is in border area, then rupees 200 to 1300 per month. Tribal areas, it is rupees 200 per month, especially living in these particular states, that is UP, TN, Assam, Bihar, Orissa, West Bengal, Madhya Pradesh and Tripura. Then compensatory modified area allowance, and this is modified area allowance, that is 1000 per month, and field area allowance up to 2600 per month. Then next allowance, counter insurgency allowance, this is 3900 per month, and next underground allowance per month is 800 per month. And finally, a high altitude allowance granted to armed forces operating in high altitude areas. If the high altitude areas is in the range of 9000 to 15,000 feet, then the allowance will be 1060 rupees per month. If the high altitude area is greater than 15,000 feet, then the allowance will be 1600 per month. And now we'll see the other topic called retirement benefits. What are these retirement benefits? First one is annuity pension. In that, uncommuted pension. See, received periodically. Uncommuted pension is received periodically and it is fully taxable for all the employees. And we'll see what is the treatment is given for employees of central government and what is the treatment for non-government employees. Then, for employees of the central government, local authorities, defense services, the pension amount is fully exempt from tax. Then, for non-government employees, the pension amount shall be extended to the extent of one-third of the pension received as he committed to full. Employees receives gratuity too. See, for central government, the pension amount is fully exempt, and for non-government employees, it is only exempt up to one-third of the pension received. Then next, gratuity. We'll see what is gratuity. It is normally paid instead of long-term services of an employee, usually 5 years. If the employee works in an organization for more than 5 years, he will be given gratuity. For government employees, it is fully exempt as we have studied, and for the other employees, it is INR 20 lakhs gratuity received and 15 days salary based on last salary drawn more than 6 months. So fully exempt. Now these are the things under leave encashment. Section 10 subsection 10A. Under this, fully exempt for government employees. We understood that. Next, for non-government employees, least of these following things will be the exemption, right? So, Indian rupees 3 lakhs. Leave encash, that is salary received. Leave encashment is received in salary itself. Then 10 months salary basis and earned leave cannot exceed 30. Out of these four, least of the following will be the exempted. But for government employees, it is fully exempted. Then compensation for voluntary retirement. That means if any employee is going to take voluntary retirement, what is the condition for this? The section dealing with this is 10 subsection 10C. Here I have given a 4 columns containing the type of employee, condition, amount of exemption and list of the following. These are the things represents what to do and what kind of compensation for voluntary retirement is granted under section 10 subsection 10C. So type of employee, central and state government, then company and cooperative society, declared IIT and notified IIM or notified institutions. This is the type of employees, nothing but employees who works in certain organizations And condition, as the heading itself says, that it is voluntary retirement. It's under Rule 28A. Amount of exemption, actual amount received. So if these are the employees retiring voluntarily, then actual amount received will be the exemption. Then list of the following. Rupees 5 lakhs. Then next one is 3 months total salary into balance months of left salary. If you calculate these things, whichever is the least one, and that will be the compensation for voluntary retirement. Next, perquisites. The section 17 and subsection 2. These are taxable perquisites. If the population is more than 25 lakhs, then 15% of salary will be taken as taxable perquisite. When population is between 10 lakhs to 25 lakhs, then 10% of the salary will be calculated as taxable perquisite. Then rent-free accommodation. 7.5% of the salary will be taken as rent-free accommodation. Then transfer of movable assets. If you transfer movable assets, then you'll be charging 15% depreciation to computers, 20% depreciation to motor cars, and all other assets is 10%. Then concessional education fees less than rupees 1000. Then tax-free perquisites. These are the different tax-free perquisites. That is, medical facilities in India is fully exempted. Then, medical facilities outside India are exempt to permitted by RBI. If the medical facilities are outside India, then it will be permitted by RBI. It means the RBI will prescribe the exemption limit. Only to that extent it is exempted. Travel expenses of a patient with one attendant tax-free up to rupees 2 lakhs. SPF and RPF are fully exempted. URPF are taxable. That means unrecognized provident fund is taxable. SPF stands for Statutory Provident Fund. RPF stands for Recognized Provident Fund. These two are the things fully exempted, but this is not exempted. This is taxable. Now we'll see. Okay. Hope you all understood this topic, and thank you for watching. Thank you for spending time in watching my video. Please like, share and subscribe the channel. Thank you so much for watching.